Fox Business Alert, history on the horizon. The Dow, S&P 500, and NASDAQ set to close at all-time highs. Artificial intelligence momentum helping lift the market. Fund managers are also using it to supercharge their portfolios. Pacer ETFs just this month launched 2 exchange-traded funds. The Pacer S&P 500 3 AI Top 100 ETF, and then the Pacer S&P World 3 AI Top 300 ETF. Both of these baskets of stocks track S&P Dow Jones indices using forecasting methods from AI-powered investment intelligence firm 3 AI, which finds companies with what they say are the highest return potential. Joining me now, Pacer ETFs President Sean O'Hara, who manages about $41 billion with one arm tied behind his back. Just kidding, Sean. You got a whole great team behind you. Let's talk about these 2 new ETFs. Do you get a little concerned that you're doing this maybe at a near-term market top, or are you just forging ahead no matter what?
No, I think you forge ahead no matter what. If the cycle changes, what's important about what they do is they built this massive database that they originally were employing and selling to hedge funds as a sort of an overlay to their research. So they track 40,000 stocks, multiple factors. They build in an alpha score on the individual stock first, and then they implement a business cycle score. So that's the important part, right? The business cycle is always changing, so that those 2 scores combine to add up to their alpha score. And so what we're doing, for example, with PSAI is, and by the way, this is an S&P product, so you have to think about, they're the broad-based index guys, but they think this is part of their future as well. We're going to select the 100 stocks according to 3 AI that have the highest alpha score out of the S&P 500 on a quarterly basis. So if one falls out, another one will come in. If the business cycle changes, we'll see a change to the sector allocations and things of that nature.
So it's living and breathing.
And by the way, just in your previous segment, you mentioned NetApp. Well, that's one of our holdings, so we're happy about that.
Oh, good. Okay. Again, this is I guess what you would call a living, breathing ETF. You constantly can switch out these names.
Yes.
Can you just, we don't have a ton of time, but I want to know, how do you define alpha?
Well, they do it based on earnings growth and fundamentals and technicals and all kinds of things like that. Debt to equity, all kinds of measures, all the things that a traditional portfolio manager would look at. But then in addition to that, they'll overlay the business cycle piece of it. So you think of it like in terms of having like 10,000 analysts in one box, right? Running all kinds of computations off of algorithms that they've built. So it's really, it's not a totally passive. There's human interaction here in terms of how the models work. But again, we're just using the machines and the machine learning and their research and models to identify stocks that they think will generate excess alpha.
Yeah, and among them, Meta clearly is one of them.
Yes.
You got a couple of others. That said, right now I am looking at S&P sector leaders and laggards. Only 2 are in the green as we head to a record for all 3 major indices, and that would be IT, technology, and financials. That concern you at all?
No, I mean, the day-to-day stuff doesn't concern me. I think technology is, we've still got a lot of legs to go. What people don't understand about AI is it's going to be ubiquitous, but there's so many ways to play it with Vertiv, like we talked about, in cooling systems, and GE Vernova for power. So
Sean,
long legs there.
Thank you very much. And here we go. The